Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock and Sofi Technologies SOFI stock. In this video, we will be analyzing three articles, to where the first one is titled Palantir Stock, ticker symbol PLTR. Bank of America analyst sees further upside. So we actually got a new price target and price prediction from Bank of America for Palantir Technologies PLTR stock, which is very bullish and positive. After that, we're going to be moving on to another article titled, Is Palantir Stock an Undervalued Gem? So we're going to be doing a deep dive into their overall valuation and whether or not this is a good time to buy this company or if investors should lay off and wait for it to become cheaper. Lastly, we will be talking about an article about Sofi Technologies titled Sofi Stock Outlook, and we're going to be going over their upcoming catalysts, latest news updates, and why this company's share price is anticipated to explode over the next few months. So with all of that being said, don't forget to go and annihilate that like button right now for more videos on either Palantir Technologies or Sofi Technologies. Don't forget to comment your thoughts down below about either of these stories, or if you want more videos on Palantir and Sofi, don't forget to go and become a member of this channel for as little as 99 cents to support me personally, because that's what keeps me here on YouTube. But if not, don't worry, by subscribing, you're going to get this content for absolutely free. And with all of that being said, I say let's dive right into today's story. So let's start off talking about Palantir Technologies and their PLTR stock. If you're not already familiar with this company, Palantir Technologies is a big data and analytics company which serves both commercial enterprises as well as government agencies, and this company specializes in artificial intelligence and interpreting large sets of data. Palantir's PLTR stock is up more than 136% year to date, which we have called a while ago. I made a lot of videos saying that this stock would surge, and that's exactly what happened. And thanks to the company's solid third quarter guidance, there is more investor optimism going into the future earnings reports because artificial intelligence is giving this company a huge boost, at least among retail investors, to where even a Bank of America analyst remains very bullish and optimistic about this company, citing her positivity regarding the further upside in Palantir's PLTR stock. She reiterated her buy rating on Palantir Technologies with a price target of $18 per share. Currently, the PLTR stock trades at around $15 per share, while this analyst believes it could surge up to $18, while even a more bullish analyst believes it could surge up to $25 over the next 12 months. This should communicate to investors that there is a lot of upside opportunity left in Palantir Technologies. Although, as a word of caution, in the short term, this company could trend downward as low as $10 to $12, to where other analysts believe this company could fall to as low as $5 to $8 over the next 12 months. But let's go over why these analysts don't think that that is going to happen and why Palantir could potentially be undervalued. But let's dive into this article to determine whether or not it's a good buying opportunity, because if we can identify a company that is undervalued, that automatically makes it a good time to buy this stock. Palantir Technologies is somewhat of an enigma because multiple professionals and even stock reporters disagree about this company. Some are very bullish and positive, and others are very bearish and negative. The company also has various institutional backing, to where even whole institutions disagree with one another, including various investor celebrities. For instance, Palantir Technologies has gained strong support from Cathie Wood of ARK Investment Management, also known as ARK Invest, and Palantir Technologies was also hailed as the Messi of AI, and if you don't know who Messi is, he is an Argentinian soccer star who is considered to be one of the best people to ever play soccer. And the person who made that comment was an investor celebrity who is also a technology analyst named Daniel Ives. We even see occasionally people like Jim Cramer and other investment celebrities touting the future growth of Palantir Technologies. So in this video, I'm going to focus just on the numbers and not necessarily what these investors or institutions are saying about this company. Let's look at the hard numbers to determine whether or not this company is undervalued or overvalued. And when it comes to determining a company's valuation, which will give us insight on whether this company is overvalued, meaning we should sell the company, or undervalued, meaning we should buy the company, there are a lot of different metrics and accounting ratios that we could use. So to make this fair, we're going to use Palantir's PS ratio, or their price to sales ratio, also known as their PS multiple, to compare them against other companies that are in the big data analytics or artificial intelligence space that are trading at around the same multiples as Palantir. For instance, we're going to be comparing Palantir Technologies to companies like MongoDB, Datadog, Snowflake, ServiceNow, and C3.ai. And of course, we're going to be using their price to sales ratios, or PS multiple. And if you look at the chart on screen, you can see that Snowflake is trading at the highest PS ratio of around 20, while C3.ai is trading at the lowest PS ratio around 12.85, and Palantir is somewhere in the middle, which is honestly exactly where you would want to be. From the chart, we can clearly see that Snowflake and MongoDB are trading at meaningful premiums above other comparable companies, while Palantir Technologies trades in line with Datadog and ServiceNow. So it's really good to see how Palantir is sitting right in the middle of this group, because it means that they are tracking with their overall peer group, which is very positive. However, just because a company like Snowflake is trading at a very high PS ratio of around 20 and C3.ai is trading at a very low PS ratio of around 12, that doesn't necessarily mean that Snowflake is a bad investment and C3.ai is a good investment, because we have to pair this along with their CAGR, or compounding annual growth rate, in regards to their revenues. Because if they are growing their revenues faster than these other companies, then they technically are a better buying opportunity. As an example, even though Snowflake is trading at the highest premium of around 20, if their compounding annual growth rate for their revenue is 2 times higher than C3.ai, then they are actually a better buying opportunity than C3.ai. And the same goes for Palantir Technologies. Right now, Palantir Technologies has around a 16% CAGR in regards to the revenue growth rate in this year, meaning that if the other companies have a greater CAGR but are trading for a lower PS ratio, it makes them a better buying opportunity. However, even if Palantir has a higher PS ratio but also has a higher compounding annual growth rate in terms of their revenue, that would make Palantir a better buying opportunity. So let's take a look at their overall revenue compounding annual growth rate. Currently, Daniel Ives, which is a very well-respected financial analyst who focuses on technology companies, estimates that Palantir Technologies will reach $5 billion worth of revenue by fiscal 2027, and he is using a 10x or a 10 times multiple to derive a $25 price target. In previous videos, I've told you that Palantir Technologies should be trading at around a 10 PS ratio. That would be a very healthy position to acquire shares of this overall company. And that means that this company should be trading at around $25 over the next 12 months. Currently, their top-of-the-line growth is 16%, just like we said earlier, and this is in regards to their revenue. However, I do want to say that next year, they're anticipated to grow by around 19%, meaning that even if their price-to-sales ratio increases slightly, they can digest a higher PS ratio. The higher the compounding annual growth rate you have for the revenue, the higher the PS ratio is allowed to be. But in an ideal world, we would want a PS multiple of around 10 for Palantir Technologies. But as long as they can sustain a high compounding annual growth rate for their revenue, that means that they can justify their higher premium, meaning that their current share price is correctly valued for this company. On top of that, management released a shareholder letter to investors saying that the company's latest AI developments for their AIP services has led them to be able to infiltrate around 100 organizations, with another 300 organizations being identified as further opportunities, which will lead to higher growth rates, and thus a lower PS ratio, making their overall valuation very digestible. So essentially, Palantir is trading in line with their PS ratio compared to their peers, meaning that they are not overvalued compared to their overall industry. On top of that, Palantir Technologies is growing at a high enough growth rate to offset any premium in their share price, making right now a moderate time to either buy or hold the stock, but ideally, getting this company as cheap as possible is going to be the best course of action. That's why this stock reporter says that investing in Palantir looks a little cloudy right now. Some analysts favor the company's progress in AI, while other investors need to see more concrete financial results before buying. But I think as Palantir Technologies continues to aggressively invest into artificial intelligence, the company is set for long-term growth. On top of that, Palantir is emerging as a leader in artificial intelligence, which means that it deserves its higher premium. And technically, its higher premium is trading in line with their overall peers, making it, again, only a moderate premium, not necessarily a high premium. So what should we do with this company? Well, honestly, I'm going to quote directly from this article because I completely agree. And he says, if you invested in Palantir stock earlier this year when it was trading around its lows, it's probably not a bad idea to take some gains and recoup your initial investment, given how much the stock has run up. However, as a long-term investor, my suggestion would be to hang on to the bulk of your position, end quote. And I completely agree with him. Take some profits to at least remove your initial investment so you've literally removed substantial risk from your position, keep the bulk of your position, and then let the rest ride for the long term. As of right now, there is a lot of demand for artificial intelligence products, and Palantir's AI suite is very encouraging, and I anticipate that they will be able to take advantage of this trend, which is why ultimately the author says that you should dollar cost average into Palantir Technologies over time. The sky is truly the limit for this company, but you need to be able to digest and stomach the volatility that this stock will generate in the short term over the next few years. But overall, I would say Palantir Technologies had a great catalyst from that Bank of America analyst reiterating their $18 price target despite Morgan Stanley saying this company is only worth around $8. So overall, I would say Palantir Technologies is looking very good right now. Lastly, let's do an update on Sofi Technologies and where this company is headed in the future. If you're not familiar with this company is a financial technology company, also known as a fintech company that operates as a digital bank. This company has been growing like crazy. They have really been innovating, and their acquisitions led this company to be an absolute powerhouse in the fintech space. One of my favorite things about Sofi Technologies is their ability to attract customers. Their marketing efforts to bring people in and for them to become Sofi members has been very effective. For instance, their marketing campaign named Changing the Face of Finance garnered over 72 million impressions in just 5 weeks, and that brought in a load of members. On top of that, the company has done something that not many other banks or fintechs have done, such as partnering with Expedia to launch what's called Sofi Travel, which offers their Sofi members discounts and cashback rewards when they travel, which diversifies them from more traditional finance products. On top of that, Sofi has a very diversified business model, which is divided into 3 main segments. Their first segment would be their lending segment, then their technology platform segment, and then their financial services segment. And since student loans are coming back online because payments will be due on October 1st, this is going to create a lot of demand for their lending segment, where Sofi Technologies will be able to refinance student loans, help other people out, and also gain revenue. I love a company that helps people and also makes money. Student loans were frozen for a while due to the student loan moratorium, which has slowed down their overall revenue generation in this particular segment of their business. However, thanks to it ending and payments starting on October 1st, this will increase the demand for people to run to Sofi Technologies to refinance their loans, and I expect them to launch a new marketing campaign once October 1st comes for them to encourage people to refinance their student loans at a cheaper interest rate so they can save money with Sofi Technologies. The CEO of Sofi Technologies even put this market into perspective, because listen at the market opportunity that Sofi is about to have running toward them. And I will post the quote on screen, which says, and I quote, "There's over 40 million Americans that still have federal student loans." Think about that number. 40 million Americans. We haven't even refinanced 1 million student loans in our history. In Sofi's entire history, we have not refinanced more than 1 million student loans. Federal loans, including private student loans. And so the opportunity in front of us starts with 40 million. And then you can break it down from there based on demographics and so on. So this means that literally Sofi Technologies is about to enter into a large market of student loan refinancing to where they can potentially give their service to 40 million Americans, which will not only help those people lower their interest rates and help them save money, but it's also going to put more money in Sofi's pocket. Sofi also had very impressive Q2 results to where they achieved their 9th consecutive quarter in a row of record-breaking revenue and their 4th quarter in a row of beating record-adjusted EBITDA, which again is extremely positive. Looking even further ahead for their 3rd quarter results, Sofi Technologies raised their overall projections and they will achieve GAAP profitability in Q4 according to their management and various professionals. So for the entire year, Sofi Technologies is looking primed for future growth. Their adjusted net revenue is supposed to come in between $1.9 and $2.03 billion, equating to an annual growth rate of between 28 and 32%, which is extremely positive. And here's the kicker. Once SoFi Technologies becomes profitable, the sky is the limit for this company. And their valuation is extremely competitive. Remember, we talked about Palantir Technologies, who has a PS ratio of around 16, which is rather high. SoFi Technologies has a PS ratio of around 4. And since SoFi has an even greater price to sales ratio than Palantir Technologies, not only are they cheaper, but technically you get more bang for your buck. However, I'm not necessarily saying that SoFi is a better investment opportunity, considering that Palantir has way more cash on hand and virtually no debt, and I can't say the same for SoFi Technologies, so they each have their pros and cons. But overall, from a valuation standpoint, SoFi Technologies looks like the sky is the limit for this overall company, and with their CEO speaking at a conference on September 6th, the company entering into a time of profitability in quarter 4, and their quarter 3 revenues anticipated to beat expectations, we have 3 major catalysts coming up for this company, which should increase their overall share price. With that being said, I hope you enjoyed today's video, and I would say that this was a great update for both Palantir Technologies and SoFi Technologies. If you made it all the way to the end of the video, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.